Greetings, members, one and all of the Salivation Nation. Gold and silver tumble for us for many different reasons. We're going to explore those right now. Let's take a look and see what's happening. Look at the prices there and look at the prices now. Pretty big hit on both metals, gold and silver. Even platinum and palladium have taken a pretty big hit. Let's explore. Yes, and as is the case, typically is the case, well, gold and silver directly are affected by the value of the dollar and the strength of the dollar. Right now, the dollar is strong, but a lot of things are tumbling, including the stock market. We see this ticker from MarketWatch that the Dow has ended a turbulent session with over a 500-point loss. And because the dollar is stronger, well, the gold and silver are down dramatically, and this is a rise in coronavirus cases that sparks a dollar rally, and these rise in these cases are happening in the United Kingdom. We'll talk about that a bit more here, but first let's go to this article from CNBC. Gold slides 3% on strong dollar and stimulus concerns, and silver tumbles. So gold slumped over 3% on Monday. Let's look again. We can see here, actually, it's kind of recovered some of its losses. It's now down almost 2%, but it took a pretty big hit. It went below $1,900 earlier in the day. It's sliding to its lowest level in more than a month as a broader market sell-off driven by uncertainty over more U.S. fiscal stimulus pressured the precious complex, along with a stronger dollar. Silver plunged 8.3% to $24.53, its lowest level in over a month. And just as I've said before, whenever, the volatility of silver is as such, which is another reason why I've moved more towards gold, because silver is more volatile. When gold goes down, when it takes a hit, silver tanks. And that's exactly what happened today. Like clockwork, it's predictable. And the other way around, too, if gold increases dramatically, well, silver will increase even more so. But to the upside, silver hasn't been quite as impressive as its losses are when gold goes down. Spot gold dropped 2.1% to $19.09 per ounce after falling as much as 3.4% earlier in the session. It's now recovered a little bit more of those losses, but it's the lowest since the 12th of August. U.S. gold futures settled down 2.6% at $1,910.60. Gold should be trading higher on safe haven demand, but it's kind of a repeat back like in the spring when the market sell-off comes. Market participants have been selling off assets across the board, said Bob Habercorn, senior market strategist at RJO Futures. There's just a lack of safe haven buying, and is following the sell-off in equities, and dollar strength is an additional weakness. Wall Street's main indexes hit their lowest levels in nearly 7 weeks on Monday, while the dollar index rose 0.8% against its rivals, its highest daily percentage gain since the 19th of March. And that is interesting and fascinating to see, especially when everything else is kind of tumbling all around this. I think even cryptocurrencies are down as well. The chances of Congress agreeing on any stimulus package before January is essentially close to zero, said Tai Wong, head of base and precious metal derivatives trading at BMO. A move back and close above $1,900 is needed to grant a short-term reprieve, but looks like we may have to test the lows of the correction. 1863 at some stage soon, and I kind of doubt that. I think gold is starting to recover some of its losses for sure. Actually, I was fortunate to make a purchase on the way down. I didn't catch the bottom, but I caught it on the way down to make a purchase today. We'll see how that pans out for what the prices will be tomorrow in the coming days, because we could start testing some of these lows again. We'll see. Gold prices are down nearly 10% from all-time highs hit in early August as hopes of further stimulus are dwindled. The U.S. Congress has for weeks remained deadlocked over the size and shape of a fifth coronavirus response bill, on top of the approximately $3 trillion already enacted into law. Gold has been feeding off progressive rounds of more stimulus, and the fact that this is stopped in the United States, at least for now, seems to have halted the gold rally in its tracks. ED&F Man Capital Markets analyst Edward Meir said in a note, investors now await speeches by Fed committee members, including Chairman Jerome Powell, who will appear before congressional committees later this week. So platinum declined 5.2% to $879.48. And after falling as much as 8% earlier in the session, and palladium dropped 3.9% to $2,265.10. So they took a beating today for sure, the metals have. And, and that's part and parcel. But here, the Market Watch article talks about this coronavirus cases and a rising global risk, including renewed COVID-19 lockdown measures in Europe, especially in the United Kingdom. Partly to blame as bullion prices slumped to the lowest finish in 2 months. A sell-off across global equity markets tied partly to worries over the rise in COVID-19 cases and the potential for the renewal of restrictions on activity, as well as uncertainty over a fresh round of government relief, added to the negative tone, which is, it's interesting that it would fall considering these concerns, these global risks. You would think it would be the other way around. But it says that gold is once again not providing shelter in these hazardous times, said Craig Earlham, senior market analyst at Oanda, in a market update. The dollar is instead making strides higher, which is further pressuring commodity markets and taking gold with it. Against that backdrop, the dollar was up 0.8% at 93.9641 as measured by the ICE US dollar index. Gauge of the buck against a half dozen currencies. Stronger dollar can make gold more expensive to overseas buyers using other monetary units. And that just goes to show you the dollar has won the day here and beat out the precious metals. That's why I tell people, don't underestimate the power of the dollar during these times. And today is a perfect example of that for both gold and silver. But in the long run, well, what do? We hold gold and silver to protect ourselves against economic instability. But what you're seeing are sell-offs, probably as well in the marketplace. And what we had happen back in March, people wanted the protection of the dollar, and that's what they did. The dollar also won during that time as well, and that was a lot of concern during the beginning of this pandemic and the response from governments and in the economy around the world. And people want the safety of cash, essentially. And when you are trading it in electronic form as exchange-traded funds, well, how many of those people really understand gold and silver? My guess is probably the vast majority of them really don't. Whereas those of us who hold the physical metal, it's a different story. We understand it profoundly. It's not just a number, a digit on a screen that is out there to kind of protect us or whatever as a diversification tool there. For us, it is a diversification tool, but it's also a way of life. What is that way of life? That way of life is an insurance policy. Insurance policies are a way of life. We protect ourselves with those. It's shelter. Same thing with gold and silver. And I don't think that many people who accumulate it in electronic form as exchange-traded funds really understand that fully. By the way, there are many in this community who do accumulate gold and silver in those ways as well, but they also have physical. And I'm talking about those. I'm talking about those who trade stocks, and they figure, well, you know what? Let's grab a little bit on the side and ETFs to kind of protect ourselves and what have you. But many of them are kind of wimping out in times like this when the dollar goes up, well, they sell off. But we'll see. But anyways, nonetheless, I know somebody who is doing that as well. And I've talked about that as an example in prior in a prior session. In fact, during the rise of COVID is when that had occurred there. But nonetheless, it is fascinating to see what's happening here. Financial markets also declined amid the anticipated political turmoil surrounding Supreme Court Justice Ruth Bader Ginsburg's passing over the weekend, said Brian London, editor of Gold Newsletter. We covered that. Actually, that news broke while I was live on Friday night. So the viewers made me aware of that. We certainly do have respect as a justice of the Supreme Court. To lose a justice is certainly always sad, even if we disagree with them politically and their viewpoints and how they've done some things. It's always a sad time when a justice dies, for sure. There you go. Geopolitical flashpoints like these and things as well. It's happening around the world. European equities tumbled Monday as well. These are no reason to buy gold when they elevate its price, and similarly are no reason to sell gold when they'll force it lower, London told MarketWatch. That's because they usually pass quickly with no long-term effects on the market. That is one thing. I had a member of the community contact me about silver. Should I sell my silver now? It's starting to drop. And I'm like, I wouldn't do it. My advice is to hold on to it. I would never sell on a panic. I'm worried about it's going to flash crash or what have you. More than likely, it's going to rebalance itself. In that particular case, you try to cover your losses or whatever, but especially if you're holding physical, you're going to lose out when you go to sell it anyway, because if everybody's selling, local coin shops, pawn shops, or wherever else you sell it, it's going to be a buyer's market, and they're going to give you much less than spot for it, or more. So that is the thing to kind of consider here. Granting said that when they drive gold lower, they can be a buying opportunity. And granting that the controversy over naming a successor to Ginsburg will likely add uncertainty to the political situation for weeks to come, there should be little doubt that the Fed will come in with whatever monetary adrenaline is necessary to support the markets. This stands to be a buying opportunity for gold, given the very powerful long-term trends of the extraordinary monetary accommodation, London said. So yes, so very, very good. So we'll see what happens when Jerome Powell will testify later in the week to the House Financial Services Committees on the CARES Act on Tuesday, and the House Select Subcommittee on the Coronavirus Crisis on Wednesday. And but it's likely that we're not going to see any kind of stimulus come from this because of the political gridlock in Washington, D.C. But even if it does happen, what does that mean? It means more liquidity, it means more money printing in order to provide this stimulus when we really can't afford it. There's a lot of things we can't afford as a nation, but we do it anyway, because they have the luxury of being able to just print money like it's going out of style. Yes, indeed. So, a further bolstering of the case for us that hold precious metals. So there you go. I hope you enjoyed this video. Post your thoughts below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.